Hey guys, welcome back to this trade recap. It's going to be my first trade breakdown on YouTube. I did a lot of trade breakdown before on my TikTok page, but those were very short. Well, this one is going to be very in-depth with a lot of details, a lot of information for you all. So hopefully you can gain value and take a lot of notes out of it. All right. And on the top of that, I will be also making sure that I literally show you everything that I shared so far on my YouTube channel. So all the tips and tricks, the way I shared so far for you guys, I'll be implementing and using on the trade analysis, because at the end of the day are the pretty much most of the things that I use, if not half of it. But in this way it will help you to understand fully how you can practice it once you finish watching my videos. All right. This being said, let's jump to the chart. So before taking any trades, okay, you guys have to start building a narrative. Narrative is the most important thing, because if you don't have a narrative and you don't understand what's going on and you don't put yourself as a part of the story, it will get so hard for you to take a trade, whether it's a buy or it's a sell. Okay, so there are so many ways one can trade one can trade. And the hot topic currently is all about liquidity. You probably heard a lot of people talking about how to trade inducement, fake out, and all these sort of things. Now, there's nothing wrong with that, but personally I don't use those type of concept, because as I said, you can trade in a different ways, a lot of ways, and that's I think the most beautiful things about trading, right? And most of the time you can trade in a way that is the most comfortable way for you and is the most suitable to you, in order for you to facilitate everything. And in my case, it's going to be about supply and demand with a bit of mixture with the SMC, which is money concept. And that's what I'll be using today as well, to show you how I analyze and see everything to the market, right? So first of all, for me, is when it comes to build a narrative, I have to start with the high time frame range, which is usually starting from 4 hour, anything between 6, 7, 8, 12 daily. Now you might wonder why I have 6, 7, 8. I mean, what is the meaning of it? It's because sometimes if price is too choppy, it's too messy like this, what I tend to do is just go higher with the time frame to make sure that I have something clean and neat in order for me to use it and trade with that. Okay, so now that I know that this is my higher time frame range, what I have to understand is that what's going on within the range and what part of the phase are we in. Are we going to an expansion phase? Are we going to a retracement phase? So you can see that this one here is going to be to the upside. We are currently having the retracement phase going all the way to the downside, and most likely price is trying to get somewhere around this demand zone. Why this demand zone? Is because this demand zone is what gave market what gave the market the push to go all the way up here, right? So there's a lot of volumes and a lot of pending orders stuck over here. So once price comes here, I would like to see something like this. But again, this is a higher time frame narrative, so it's not that we have to wait for years, because this goes back to 2022 and currently we're somewhere around here. Now, why this is important? Because once I know in which phase I am taking the part of, which is currently in the retracement phase of the higher time frame, all I have to do is trying to replicate the same exact things to the downside. Now, how do I do that? So if I know that this is the intention of the market to come here because it's the demand zone, I need to understand that in order for market to get this level, market has to reach a supply zone where they will take enough orders in order for them to push price to the downside. So where are the supply zones? There are several zones over here, like here. Sorry, one second. All right, here. And then we have, and whatsoever and so on. Now, I know those zones are very big, and there are actually ways to refine them better, making really small, which is something that I will probably cover in another video in depth. But now I want you guys to understand just the basic logic of how everything works, like from demand to supply, supply to demand, as simple as that, nothing complex. Now, in order for price to reach here, price has to come somewhere in one of the supply and then start pushing them to the downside. Obviously, again, this is a higher time frame narrative, so I can't wait like for crazy days for me to see price coming somewhere in one of these zone and then dropping to the downside. So I do the same exact things to smaller time frame. I get down, right, and what I started noticing is that price, when it reached this specific zone, like it has been bearish for such a long time. So you can see that price, one second, okay, so you can see price has been going down, high, low, came here, again, low, high, low. So everything is like strongly bearish, that at a one point past price start giving strong reactions over here, right? So that is already telling me something, that most likely price is going to break the order flow, the current order flow to the downside. And guess what happens? Literally that. Price breaks all the way to the upside. That is giving me that currently the order flow has been broken. So therefore, there is buyers coming into the market. So there's intention for price to go to the upside. But why I know that price has intention to go upside, and is this intention valid for me? Yes, absolutely. Why? Because if you go back to the higher time frame, that's why I say it's very important that you build a narrative. You can clearly see that price in a higher time frame just broke through a very important demand zone. So that is telling me that if this demand zone has been broken and it was not the right demand for price to go to the upside, most likely price will come to the lower one. So if price has to come to the lower one, what did I say before? It has to go to the supply zones, right? To take the orders and then push to the downside. So now that I know that's the whole story in the higher time frame, I just wait price to get there. And what I can do is like taking a trade that allows me to bring price all the way up here. So I just go literally with the flow. I'm not making things up. I'm just going with the flow. So if I see the smaller time frame, the intention has changed, all I have to do now is just wait for the price to retrace and then go to at least this supply zone. All right. So now, how do I take the trade? When price breaks this to the upside, then I start using some of my confluences and I start seeing what is actually going on within this price range. Remember, price moves always within from one range to another one. I showed you and I shared with you the higher time frame narrative. Now I'm sharing with you the smaller time frame. In this case, you can see this is my leg, and within this leg, I have to understand what's going on. So currently, you can see that in this side of the market. Sorry, one second. Let me just move this one. If I remove this side, all right, beautiful. So look at this. First of all, what can we see? That price was going with a nice flow over here, then it takes out liquidity, all right? And then it shoots all the way up here. And then we can see that from this moment, from this zone to this zone, there has been not any important retracement, and therefore this range became very, very, very inefficient. So all I did was to wait price to come back at least somewhere from this box to this zone, right? So sorry, from this zone to this zone. And also another thing that caught my attention is the fact that price has taken a lot of liquidity from this specific zone with this drop all the way down here. So those are the way I'm starting now, stacking narrative plus different within the confluences, right? So what are the confluences? First confluence that I have over here is that price is inefficient, right? Because price just went all the way up there without giving me smooth, nice retracement. Secondly, I can see the price has taken the liquidity. Therefore, I know that there is a mitigation needed at least somewhere down this range. And thirdly, if you want to be more like very, very accurate, another thing that you can do, let me just mark it over here, is to take your last sell order block, which is this one, before they move to the upside, and mark up the 50% of that range. And I made a very beautiful video about it on my channel, so make sure to check that out so you can understand what I'm doing over here better. So I can take the 50% of the range, just to be more precise, having a very solid entry zone. And in this case, that's going to be my 50%. So now I have three very important confluences that is telling me that I can take a trade from this specific zone over here. However, am I going to take the trade? Like, am I going to do this? Yeah, of course. If you want, you can do that. There's nothing wrong with it. Let me show you. So if I go to a higher time frame, I got 15 minutes. Sorry, let me go back to 1 hour. Apologies. All right, check this out. So I know that this zone here, this box is going to be a very strong one. Can I take that? Yeah, of course you can do that. Like, it's going to give you probably a 1 to 3 risk to reward. There's nothing wrong with it. But me personally, I love to trade with high risk to reward, and I love to build all the narratives of different time frames all in one place. So let me show you what I'm saying about it. So when price, now let's see what happens if price gets to our 50%. I know that's the box, so that's what I'm waiting for. Bam, look at this. Look at the beauty. Like, I personally did not use the 50%. I used something else that I'll share to you now over here. And actually, let's go to 15 minutes. All right, yeah. So I've used this tiny zone over here. Why that is a bit more advanced concept, something that I might share in the future. But that was the zone that I was looking for. And price tapped nicely inside the zone. So next thing, all I had to do was literally just to go to the smaller time frame, see what the price was telling me. And as you can see, right, I made another video again where I explained the intentions, the momentum, and how to understand that to use on your advantages. So here you can see price is shooting all the way down here. Before price reached my POY, it started ranging. you can clearly see that the sellers are losing control, buyers are taking action, and then at one point, bump, we have a break to the upside, like very clean, telling us that probably we might shift to the upside now. Careful, because this can be also a trap. Now, for me, I personally took that because this yellow zone for me was very valid, but price could have easily done something like this, going down, then again, break to the upside, and then going probably towards the upside, right? So in this case, what then happened is that I went inside, I then refined this better, all right, took a trade from this level with sub pips of, let me see one second, it's going to be around like 5 pips. What was my target? Do you guys remember when I said about the narrative on the higher time frame, how to build that in order for you to do the trade? So my target actually could have been all the way up here for a nice 1 to 26, because I know that's where price is heading now, right? I mean, obviously that's again from a statistical perspective, because nothing is 100% guaranteed. However, what I did is that I closed it around 1 to 20, because from a structural perspective, I was expecting price to do this, right? So I know that as a minimum, price has to come somewhere around here, and then later on, price can do whatever it wants, go all the way up there, and wherever it wants. But for me, I was more than happy with the 1 to 20. I don't want to be greedy or anything else. I have a very solid, strict rules regarding my risk management, my entry protocol, my exit, and all these kind of things. So that was what I was reflecting on this trade, and this is exactly what happened next. And let me show you. Obviously, I had to wait for a bit, for a few days before it got to my TP, but then eventually here we go, we hit TP literally today, which is yesterday, Wednesday 28, and yeah, that's it, done. Actually, I got a bit worried when I saw price dropping like this, because at this time when price was somewhere around here, I was already break even, so I thought that price probably gonna take me out and then go towards my direction. But as you can see, luckily that didn't happen, and then that's it, price just shooted all the way up there. Currently, if we look at the current price action, price is somewhere around here, but I do expect price to reach somewhere above this zone, somewhere within this specific zone, and then probably here as well, and then probably going to the downside. But again, this is just for me forecasting what LGB is going to do over the next few days. However, as I always say, you don't have to forecast or predict, you have to always react to whatever you're saying on your charts, and that's literally what I did, and that's literally how I broke down the whole process. And have you guys seen that, the way I've taken this trade with 1 to 20, like with the confidence, it was based not in what happened over here in a smaller time frame, but because in a higher time frame, I knew my playing field, which was one here and the other one here. So I knew that I had to take price from one direction to another one, and that was it pretty much. So I hope you guys gained some value out of everything that I shared, and you guys most importantly being able to learn and understand how important it is to build narrative starting from higher time frame all the way to smaller time frame. So this being said, I'll see you in the next one.